Good morning, everybody. This is Dee Dee with Power 3 Trading. I'm not here just to teach you the strat, but to teach you how to profit from the strat, profit from the market using the strat techniques. If you have any more questions regarding the strat, please reach out to my guy, Rob Smith, at Smith's in the Black channel, Rob in the Black on Twitter, or at sepiagroup.com. So we have had an interesting, uh, last couple months, guys. We'll talk about the broader market again as we look at this market continues to want to tick higher. It's taken out this outside bar on the Qs, right? Taking that out and now is inside this outside bar on this weekly on the Qs. So let's open this up on the daily. Let's see what that looks like. Okay. So we've just basically drawn some horizontal lines here. We didn't necessarily draw broadening formation, just some horizontal lines to say, hey, price action is inside this outside bar. I had to clear this cluster right here. And it did that, right? This is our next level here, but it's got to take this guy first, the low of this guy. So if we're trading back up, I like to draw those lines at the low of those bars as it coming back into those previous ranges, right? So it's got to take this guy out. So I like to draw those horizontal lines at the low of those bars as it comes back in. And so you can see price hit it, traded just above it on the 15th. And then again, yesterday, it actually traded down, came back up, retested that, and created an outside bar, right? So it's trying to trade inside this range, hit it now twice. This orange line here, guys, is pre-market. Let's see what happens. But remember, we have this outside bar here, but it's a doji. Potential reversal signal. Yeah, right? I like dojis at the top and bottom of a range. So let's see what happens with the day-to-day. Price looks like it wants to trade lower. So we'll see. And it may try to trade back down through these ranges that we previously drew. So we're going to leave those lines for now. But just keep in mind, we're still above 100 on the daily. CCI is still above 100 on the daily, on our daily charts. It was creeping above there on the weekly. And so again, our target here is to take this guy. May not happen this week. Today's Wednesday. So we'll have to wait and see if that happens. Okay, so we'll be careful as usual, which is why I prefer not to start my morning out before the 15, 18-minute close. All right. On the week, on the SPY, you see it was able to take out this outside bar here. But again, market looks like it's topping out. You keep seeing the market go higher, higher, higher. CCI, it drifted higher a little bit. Didn't create any new highs, but still higher than this last gapper here. So in order for me to get any comfort around reversal here, I'd like to see that trade back below 100, but it's still above it. So we're going to, again, with caution, see how we're going to trade this. Price again is below yesterday's low. So we'll have to wait and see if the CCI turns down. So the white line here turns down like you see here, then I'd be looking to see if we're going to get a reversal on that. But you can see it turned down, trade it down in that second day, but then right back up, guys. Right back up. Trade it down, gap down. Next day, right back up. CCI didn't move a whole lot, but it gapped up, came back down, traded down, and then we saw this move. All right, so Hard to tell. Momentum still looks to be a bit strong, but if we're going to take any short-term puts or shorts here on this market, we definitely have to use our ADR, average daily range that we've been talking about. All right, so it looks like it took this high, guys, and if it trades back above yesterday's high again, we have this potential here. We got this 2-down candle here. We'd probably use this as our next target because that's going to be below this high. It's already in this range, traded up inside this range above these guys, right? It's already done that. So it's got to trade, take this low out here for me to think that it's going to continue. So we'll put that as our next target on the long side, but we'll use our ADR intraday because we just don't have, I have no conviction the market is reversing. IWM, again, you know, CCI looks like it wants to turn over here. We've already kind of marked our targets. We'll look for a price to take, it's inside this range. It's got to take this guy. Let's see if it took this guy. Yeah, so it took this guy yesterday, right? You can see that it's coming up inside this range. There was a low here on this candle. It took that guy yesterday. Looks like it may want to reverse. It's stuck now, right? So it's got to take this high before it takes this outside bar, but we'll just leave it there. All right. So for now, I am looking for, we still have full-time, or not full-time, but time frame continuity on the indices, right? Everything but the year. But we kind of talked about that, right? So Friday is our last day in this 3-week candle. Would not be surprised if we see that reversal next week, but we're going to have to wait. All right, so let's see if this is our 2-week candle. Let's see if this starts to reverse here on the weekly. That'll give us some indication. If you look at IWM, if I see, if this closes red on the week, this is setting up a really nice evening star pattern. So this 2 up, if this closes red on Friday, I'd look to short this next week. So we'll see what that looks like. See what kind of patterns form at the end of the week. If the market turns red for the week, I'd be looking for shorts next week. So we'll see. All right, turns red for the week, setting up an evening star pattern, right? 2 up, red, small body candle, red small body candle closes down. Look for a red week next week. So we'll see. All right. Now let's talk about what happened yesterday in the market. We'll talk about Walmart first because we had it on our list after. Actually didn't do a video yesterday, but the guys were with me in the mornings, kind of talked about this. You know, we drew our broadening formation way up here because Walmart needed to take this gap. Not sure where that line came from. Oh, here we go. This 2-down bar here. So Walmart needed to take this gap, which was in here. I think I added this line because this was in between, and it didn't do that. Okay, it did not close the gap, guys. And on those gappers, my preference is to trade reversals. But when you look at our price action, didn't really give you a good reversal signal because I like to trade reversals off the low ADR. That's a 6-minute. Now you look at this on the 18, 2 up, inside, 2 up, 2 up, inside, 2 down. Let me flip this over to our 45. Because the 45 has helped us here lately with our entries. So 2 down here, you're inside this 45-minute, and it's clearly above 200. So strong at the open, right? We really didn't get our crossover until this 90-minute flip. right? So the 18-minute had crossed over, 45 had not, and it was still trading above its average daily range. Once we got an inside bar here, so I'm not looking to trade this higher. This was not a move for me, a signal, because it was a gapper. It had already traded well above its ADR. So I wasn't looking for price to go higher. I would have been looking for a reversal. We did not get that until the 90-minute flip. It traded up, 2 up. So you had an outside bar, 2 up right here at the 90-minute flip, another outside bar, and then 2 back down. I think it would have been a hard trade, but you really didn't get your signal until after it crossed over here on that 45. And then you see 245, 236 right here. You had a little bit of a move off this outside bar, right? 3, 2, 3, 2 down. And that would have confirmed here. But, and you can see it's trading a little lower today. I think Target, when they report it, not so good. We'll talk about that a little bit. Yeah, they missed. I think they're dragging the market, dragging Walmart back down. But let's talk a little bit about the what happened yesterday, and we'll look at something for today. All right, yesterday, again, guys, the market is struggling to trade higher. I'm gonna flip this back to the daily, because it's reaching those levels of level of exhaustion we talked about, right? 2 weeks. TTO, you had a reversal here, continuation on the week, reversal here, continuation, reversal, continuation. All right, so you had a couple dips here where price action traded down and right back up on the weeklies. All right, so 4 weeks of some really nice upside movement in the broader market. And it's just tired, right? Who's buying it up? Who's buying it up? Right? Recent survey suggests that people, or for the people on the street, that they're not convinced this is going to be a new bull market. So if that's your view, then you too should be a little cautious, right? So here's what happened. Price trade gap down. All right, this orange line is simply my opening range, so it's 18 minutes. So price traded 2 down, 2 down, inside, 2 down, inside, 2 down, inside, 2 down, inside, 2 down, 2 down, till it hit our ADR. So remember, you have to decide for yourself which time frame you're looking to take your signal. If that's the 6-minute, it could be an inside bar or a 2-2. If it's an 18-minute inside bar or 2-2. And so you can see how price traded down. That would have been a difficult trade because of all of the inside bars off the 6 minutes. Just crazy. And then you got your inside bar here on the Qs at the bottom of a range, so low ADR. This is where I like to trade reversals, guys. So if you are in conflict like you are here, because you're trading inside day, it peaks right below the day here, which I'm telling you is so odd the way this market traded below this day here. And you're thinking, we're going down, only for it to come right back up. That's okay, guys. Even if you had gotten in here and held it, once it hit your ADR, it went 2 down on the day right here. So where that red line is, went 2 down in the day. Inside, back above ADR, you have to exit that trade. CCI's crossed back over, because the whole purpose of the ADR is we've kind of replaced our broadening formations. So we have to treat it very similar. Reversals off the highs and lows of your ADR. So if it comes back inside that range, doesn't necessarily mean it's going to go all the way back up and create an outside bar, but you have to be prepared for that. So exit those trades. If you're short here and price comes back in, you have to exit. Now you have your inside bar. Price crosses back over. So that's where I'm looking for reversals, when price crossed back over plus or minus 100. So cross back over the negative 100 here. Let's see, our 45-minute I need confirmation from the broader time frame. So this is your 11 o'clock flip, green on the 90, and voila, you have a 222 on the 45 above zero, above zero. So potential for this price to continue higher. Longer time frames in the buy zone, wait for this cross up back above negative 100 and look for a long. All right, because the idea here is you want all of your preference would be for everyone, all of your time frames to be either above zero or below zero for shorts. In this case, your 45, your 90 was above zero. You had your 18-minute flip here. It was not above zero, but it had crossed back up, right? So if it's below negative 100, I'm not interested. But once it crosses back above negative 100, I am interested. Crosses back over zero here, and off she goes. So, so 3 out of 4 ain't bad, right? But if this if 18-minute is still well below negative 100, I'm not taking that trade to the upside. I'd be looking to see if this is going to go short. Okay, so IWM, let's look at that. It's very similar, guys. Okay, 222 on the 45. CCI is trending up. 90-minute flip. The 90-minute flips are very powerful, especially at 12:30. If you don't, if this does not reverse, right, because this is when your 60 is going to reverse at the same time, right? Your hour, your 3-hour, your 90-minute continuation, 12:30 flip. It goes 2 down. It does not reverse this 90, guys. 2 continuation. You take that rev strat right here. 2 down, 2 up, 2 down. We're not reversing. Inside, and you wait for your next move at 115 or right here at 106. It turns this guy. Yeah, it probably didn't. It was close. It was close. Where it turned that red, green right before that the flip here. All right, so you take this guy, continuation on that 90. 90 flips, guys, 90 flips. All right, SPY. Again, very similar. First 90 minutes, still in the buy zone, still in the buy zone. You get this 2 down, 2 down, and you can see how difficult that was. Look at all of those sub triangles. 2 down, inside, 2 down, but it didn't continue. 2 down, 2 up, 2 down, inside, outside, inside, outside. What a nightmare. What a nightmare. All right, but you're inside this day, and that's why inside days are so difficult. You were still inside while all of this was going on, and this is why you have to look at the multiple time frames. It's trying to take this. If you're going to go short, you got to think about, and is the market going to take this guy out? So it's got to trade lower. And if you look at your CCI and it's like, well, you know what? It still looks like it's trending higher. You got to be patient here. You got to be patient here. You have to be patient. Wait for that next flip to see if you got that reversal back to the upside. Because all that did was TTO'd inside this daily range. And then it continued. Okay. So here, again, you have the shooter on the daily. It's trading lower, right? So what you're going to see here is on the SPY, if price stays below the low of this range, we're looking for shorts. But if it gaps down like it appears to be doing here in pre-market and trades back inside that range, I wouldn't touch it. I wouldn't touch it because now you have a 2 down with the potential for a 3. It could work, but everything has to be in sync. Otherwise, you're going to see this kind of stuff. Very difficult, choppy trades. So look at what the market is telling you. It's inside day. Don't take that trade. Wait. wait. Let's see if what the next 90 minutes tells you, because you can see this doji here. 3, 2 up. And you know, guys, before we stopped drawing broadening formations, you know, I would have drawn a broadening formation on this thing, and I would have said, hey, I will not look to short this if unless price trades below this range, right? Because this was an outside bar, this was a big 2 up candle, and here you are inside this range. I don't want to touch this short. It's got to go outside this range. So I know I'm not teaching that right now because we're trying to keep the trading simple, but you still have to look at these ranges. It's got to clear this guy. It's got to clear it. If it does not clear this range, this is what you're going to see. It's a choppy mess. Okay, it's not worth losing money. Zoom out, guys, and then zoom back in. All right. So what's going on today? Anything? No. Coinbase looks like it wants to trade lower. Zoom, Target, we just talked about. We'll take a look at that and see if there's any trade. Not much information, not much going on the in the news, headline news. Retail sales excluding autos. Some Fed speaks, be careful with that. You know, sometimes the Fed, some of these guys from the Federal Reserve will start talking and the whole market will just take a dive. All right, so let's take a look at Target real quick on a broader chart. All right, so it reported earnings. Not so bueno. Revenue hit, earnings missed. I'm not sure if you guys got any information on that. I think there's still some inventory challenges. So it's trading up in this range. We'll have to wait and see. Today is the 17th. Oh, joy. So it looks like we have a 2 and 3 day flip, guys. You know, I love my 3 day flips. And here is what we have. 3, 2 up, 2 down, potentially. Right? This is that 3 day range right here. This is that 3 day range, guys. So we'll look to see price trades lower on that. Yeah, but let's see if price trades lower below yesterday's low, and then you have this 3 day range, guys, this 3 day range. So this will be my target. So we'll see if price trades below yesterday's low and comes back inside this range here, 174. Then we'll see if we can get a short down to 170 on this, take out this 3 day candle right here. Okay. Coin. Yeah, I don't like coin. I don't like this big outside bar here. I would avoid it. Not outside bar, but this weekly candle here had a big move with this gapper stuck in this range. I'd avoid it. Inside 2-week pattern. Not interested in coin. What was it? Zoom. Again, inside that 2-week pattern. Hasn't done much of, and look at this monthly. Hasn't done much. Not interested in Zoom. Okay, so I'll be sticking with my usual suspects then today, guys. We'll take a look at Target. Again, price has got to trade. Let's take these old lines off. Price has got to trade below yesterday's low, right? We're going to use our average daily range. So if price gaps lower at the open, like it looks like it wants to do, I'll look to short using ADR. So and we'll have to wait and see, but if ADR price trades below the low ADR on target, for sure that's a short. Okay, so doesn't mean it's going to stay down. All right, so it may trade back up, and if that does, and you want to exit and wait to see using your 90-minute flip, because we don't want to get stuck inside the 90-minute range. Okay, and usually you start to see that on the 60, right? Because it's 60, then there's 90. All right, so if after that first 60 price starts trading inside, we do not even look at those trades when the 60 is forming inside the previous range. Okay, those are choppy. So we wait for our 90-minute flip and see if there's a continuation. If not, it stays inside 90. You're done until the afternoon. All right, so look for price action to trade below yesterday's low. 170 is our target using our average daily range. Price trades below the low ADR. We'll look to continue that short position. Jim says they had some write-downs and still some inventory challenges. So how long that will last, we don't know. So I may look to take a position on the short side if it trades below yesterday's below today's ADR. I may look to trade the short side and hold it overnight. I don't know though. We'll wait and see. All right, so we're gonna wrap it there. Let's see. We'll end our day with my favorite script, Proverbs 21:5. The plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. And we talk about this every day, guys. It is not worth losing your shirt to try to figure out how to trade this market. This is not difficult. I'm sorry, it is difficult. One of the most challenging emotionally, mentally jobs that you can do if you're looking to do this as a full-time trader, right? If you have another job, it's a little less stressful, but when you are relying on trading for your income to pay your bills, you absolutely cannot jump in and out of trades. You have to have those emotions in check. You have to be very clear on what your actionable signals are and where those ranges are. If it's in a tight range, do not trade it. Just do not trade it. Else, you'll get chopped up trying to go back down or up through those ranges. And if you're trading options, as you get closer to expiration, your theta increases, which means you can't afford to hold those positions and those options throughout the day when they're chopping you up inside 60 and it's inside 90. That's why we wait for those to close and look to see if we get a move off of an inside bar, because option traders have to be very disciplined, very patient. Take your position once price action starts moving, because we need volatility, and exit. Don't get greedy, just exit when it hits your target or it looks like it's starting to turn back in. Just take your money, nice win for the day, and walk away. All right. Well, I appreciate you guys joining me, and take care, everybody. We'll talk to you.